Hello, this is Matt on the Moon Lambo channel. I believe that I'm going to make more profit having purchased XRP than most people, and I'm not even talking about anything having to do with the average price that I paid for my XRP holdings or the amount that I hold. No. What I'm talking about is the fact that my purchasing decisions for XRP and really crypto in general, my decisions and the way that I behave in terms of purchasing, it's data driven. Whereas the typical person investing in stocks and in crypto, it's emotionally driven. And so I want to share with you, I've got a set of a bunch of facts having to do with this. And some of this I think you guys are going to find really shocking. I mean, there's this article titled, Scientist Discovered Why Most Traders Lose Money, 24 Surprising Statistics. And so what I've effectively done, and I'll just tell you this here at the outset of the video, is I've discovered how most humans behave. I've discovered that this behavior results in people not doing particularly financially well, and then I just don't behave like that. And the cool thing about this is I'm not doing something super sophisticated. I'm not saying this to brag on myself. That is not the purpose of this. I mean, I'm proud of the approach that I'm taking, but not in some sort of like egotistical, like genuinely braggadocious way. That's not what I'm doing here. I'm just acknowledging reality and recognizing that the way people are behaving is very poor, and then just not doing it. And it really is the neatest thing, because you don't have to be a genius. You just have to not do stuff. Like, that's, you'll see what I'm talking about in just a second here, but that's effective. It's just like, don't do stuff. There's something to the term hodl. There really is. But I do want to be clear before going any further. I don't have a financial background of any kind. I am not offering financial advice, and you should not buy or sell anything because of anything that I say or write. So even though I'm a complete unprofessional individual, I'm just an enthusiast, I really enjoy talking about these topics and making YouTube videos about it as a fun hobby, but that is all that it is. So I just want to be fully transparent about this. There's nothing special about me just because I'm all up on the internet and I have a stupid-ass name, Moon Lambo, which is the stupidest name in the entire XRP community. Here's a tweet from a very popular chart analyst named Mr. Whale with 88,800 followers on Twitter, and he said the following: "If you truly know what you're invested in, you wouldn't let emotions control your decisions. Instead, you would have full confidence in what you hold and be unfazed by any short-term unexpected price movements," which I think in general is a pretty fair tweet. For somebody like me in particular, who, as I cited here just a moment ago, I'm data-driven. And so here's something I tweeted out the other day. "Data informs my investment decisions. Data is the reason I don't sell in anticipation of a market drop, hoping to buy back lower. People that do that may have a few wins, but data shows they make less money than people that just hold no matter what. So that's what I do." And so think about this, and I've mentioned this a few times recently, but think about my personal journey. So I've been in crypto since November 2017. That is when I first purchased XRP. And I've never sold a single XRP in my entire life. And so I purchased, and then I saw XRP go from 20-something. And so listen to this. Like, think about my journey, and then keep in the back of your mind as I'm telling you this, how I never sold one single one of them. I purchased my XRP first at, I believe, 21 cents for the first time ever. And I rode that all the way up to almost $4 weeks after I entered crypto. It was like a really weird time to jump into crypto. It just happened to be right before the biggest XRP parabolic rally in history. So rode it up to almost $4. And then it started crashing and crashing and crashing. And I was aware of people, like how it's a terrible idea to try and time markets and trade. Even before jumping into crypto, I knew that was true in stocks, and it is true in stocks. Like what I'm talking about here, this applies to stocks, it applies to crypto. I don't care if you're trading precious metals, whatever it is, this all applies. It's about human psychology, right? And so as I saw XRP continue to crash, I started dollar cost averaging in. I was purchasing as the XRP price was going down, not concerned that I wasn't going to be able to buy the bottom, because I didn't know where the bottom was going to be. There's no way I could know. I was just confident that over the long haul, XRP at some point in the future, even if years from then, I was confident it would be worth more. And it did take years. I was down in my XRP investment for most of a 3-year period, and I just kept buying. Okay, because it's market cycles, guys. And so I started purchasing at 55 cents, then down to 40 cents, and then as it went to 30 cents, I still bought there. Then 25 cents, then 20 cents, and I was able to ultimately buy it as cheap as 15 cents when the market tanked in March of last year, thanks to the pandemic and all that jazz. And there was a bunch of other ups and downs in between. And so then I wrote it also this past November from when did it get to, like 29 cents and ran up to almost 80 cents, then back down after the SEC news to 17 cents, then back up to $2, then back down to $1.23. And I'm still here, and I've never sold a single XRP. Now, finally, I'm up since we're in a bull market and it's moving upwards. But here's the thing. Data just shows that the people, because there's so many opportunities to freak out along the way. I just highlighted some of the ups and downs in terms of the price action. There were way, way, way more than that. I could go on for a whole video. It'd be a really boring video just talking about all the ups and downs and how I went through them. But here's the thing. Like, people, they anticipate that there are going to be specific downs, or they see that XRP is going down and they think, oh my gosh, well, it's probably going to keep going down, so I'll just sell and then I'll buy in cheaper. And I know a lot of you listening are guilty of this, and maybe you've done well. Because, look, and I'll admit, like, a lot of the times that I thought XRP was going to go down, it did. But I still didn't act on it. Because if you do act on it, you will get eaten at some point. And you hear people talking about this stuff in social media, they'll be bragging, oh yeah, look at how much more XRP I got because it went down and I got so and so much more, whatever the number is now. But they don't tell you about the times when it goes the other way, when they sell and then it took off and then it's too late. And then they're screwed and then they have to buy in higher. And especially when you're talking about typically picking up you're going to pick up like 5 points worth, like 5% gains, 5% additional XRP. Think about that. Even if you do successfully do that, what about the thousands of percent gains that you're putting at risk every time you do that? Is that really worth it? You don't know when this stuff is going to take off. And so people make these mistakes. And it's not just that. Like, some people, even if it's not with the intent of purchasing more, people just panic. They see something going down. Oh my gosh, it must be the end of the world. I can't believe this. And they're losing sleep. And again, I'm sympathetic to the emotions that they're feeling, but acting on them, data shows, is a very bad idea. It's true with stocks, and again, it's true with crypto. Think about what happened during the housing collapse over a decade ago, that 2008-2009 bust led by the housing market, and stocks were just tanking. Well, was it in fact, now that we have the benefit of hindsight, was it in fact a good idea for those people that were scared out of their minds to buy after the stock market plummeted? I can't remember how much it went down. Was it like 40% or something? Whatever it was. Was that a good idea? Well, no, but people did that because they were terrified out of their minds. Was it good to emotionally respond? The answer absolutely is no. So the people that held, and they ended up making a fortune in the stock market. Look at how it performed over the next decade following that, and up into today. We've recently had all-time highs with the stock market. So this idea that you're going to outsmart everything, the data just says you're not. It's just not. And so the people that just set it and forget it, meaning like they buy and they just hold, those are the people that end up doing well. And think about this. If you want to have a longer term mindset, like, look, I understand people are scared right now. Like, what if I'm buying now and the bubble, it's inflating right now and the bubble's going to pop? And we know historically the crypto bubble, when it pops, we see 80 to 90% drops in price, which, by the way, I suspect is going to happen. I'm not trying to spread fear. That's my honest expectation, because historically that's what happened. You see these huge run-ups, you see the parabolic blow-off top, which we have not had yet. But when we do have that, then you're going to see a major drop. And it may happen over a span of half a year or whatever, how long it takes. But you're going to see the bubble pop. A lot of it will happen instantaneously, and then there'll be a slow decline maybe for another 6-12 months or more. Who knows? But that's been normal. That's what we have seen in the past. And so, you can be fearful of that too, but here's the neat thing. With every single peak of every market cycle in crypto, in Bitcoin specifically too, even if you just want to talk about Bitcoin, over the last 12 years, because we've only got about 12 years of crypto history, every single market cycle that's gone parabolic, even if you were the most unlucky person on the planet and you purchased at the tippy top of that market cycle, and it crashed down 80 to 90%, even if you did that, had you just held, then after the next market cycle completed, the top of the very next one would have been substantially higher than where you unfortunately bought before. You would have been, many. I don't know what the multiplier factor would be. You'd have to go look from cycle to cycle, but you would have been. So, like, think about using as an example this last market cycle. Even if you bought at almost $20,000, which was the all-time high in December of 2017 before the bubble popped, the Bitcoin bubble popped. Well, we know that Bitcoin exceeded $60,000. Right, and it looks like it's probably still going to go. Like, even if, whatever the price action is doing today, it's probably not done. And even if it is, still that was a threefold increase from the previous one. So you get what I'm talking about here. And so there's this website 99bitcoins.com, and this is hilarious. If you guys aren't familiar with this, this is Bitcoin obituaries. Seriously. Bitcoin has died 405 times. And so what they've done here, this is a chart over just the last 3 months. And so they take stories from the media, and these are stories about Bitcoin, it's dead or it's going to zero, and they track it and they show where it happened in correlation with the price action. And so just over the last 3 months, they've got 1, 2, 3, 4, 5, 6, 7, 8 stories of Bitcoin dying, which I think is just a hilarious thing. Bitcoin obituaries. And take a look at this, because people have been saying it's going to zero for the entirety of its existence. So let's change this 3-month chart so you can take a look at this. If you're not driving or something, you might want to see this. It's hilarious. Let's change it to an all-time chart. I'm about to flip this to a chart showing the entire lifespan of Bitcoin. And the red dots are where the stories are about Bitcoin dying. Ready? 3, 2, 1, go. There we go. Look at this damn thing. Bitcoin has died so many times. I'll tell you what, cats, they say they have 9 lives. Cats ain't got nothing on Bitcoin. Look at this mofo. Look, it just dies and dies and dies. Of course, it never really died. That's the joke. But look at this. It's just ridiculous. All these stories. And they were all wrong. And crypto just keeps going. Crypto, I don't believe for a moment crypto is going to zero. It's just amazing here, right? And so people that have the long-term mindset and just are like, yeah, I'm just not going to emotionally respond. I'm not going to try and time markets. The data proves that those people have done well. So even if you're unfortunate buying now, and that's an if this is like the top or near the top for Bitcoin this cycle, well, do you have a sufficiently long timeline in mind here? Because what if you wait another 4 or 5 years? What if you wait a decade? Do you really think that what you buy right now is going to be worth less in 5 years? Bitcoin. I mean, sure, a lot of these crypto crap coins are actually going to go to zero eventually, as soon as the market matures. We're not there yet. So, keep that in mind. I'm not pretending like maturation isn't going to matter. I don't mean that at all. And then we don't know for sure if XRP is going to continue to be adopted, but that's a factor. As long as it is, then okay. So I'll be monitoring that as well. So I'm not pretending fundamentals don't matter at all. I'm just saying in a general sense, when you're investing, like making these emotionally based decisions, historically, and it's provable by data, it's a really freaking bad idea. And so into this now, I'm not going to go through all of these, but there's this list of 24 facts, which I found incredibly interesting. So I highlighted some of the ones that I want to talk about. But again, this is titled Scientists Discovered Why Most Traders Lose Money, 24 Surprising Statistics. And it reads as follows. 95% of all traders fail is the most commonly used trading-related statistic around the internet. But no research paper exists that proves this number right. Research even suggests that the actual figure is much, much higher. In the following article, we'll show you 24 very surprising statistics economic scientists discovered by analyzing actual broker data and the performance of traders. Some explain very well why most traders lose money. And so, yeah, we're talking about traders mostly in this, but just keep in mind that the people that are making these trades back and forth and jumping in and out of positions, they don't do well. I have never cashed out of crypto. I've never converted my crypto into United States dollars, which is my fiat currency because I live in the United States. I've never cashed out. Now, I fully intend to this market cycle, but you've got to understand, I've had a very long-term mindset, and the people that don't think long-term, those are, that's one of the great ways to get wrecked, is to think short-term. I've never cashed out, and I've never sold a single XRP, because my bet the whole time is that XRP will hit its all-time high again at some unknown point in the future. While everybody was saying all this negative crap and scary stuff over the last few years, I was like, yawn, whatever, don't care, don't believe you. I don't think that's happening. Market moves in tandem. Bitcoin's going to lead the market. XRP is going to follow. And finally, I'm starting to get some proof that that way of thinking is correct, because I do see the market continuing to move in tandem. XRP is part of that market, and it ran up from in recent months a low of 17 cents to about $2. And again, mind you, I endured all this, and I actually felt fine with it. Like, I was emotionally fine, but I was down or roughly at even for most of a 3-year period, and I didn't care, because my bet has always been that XRP at some unknown point in the future would go up with the rest of the market. So I didn't care, and I felt so strongly about that I've slept easy the whole time. So I just kept a dollar cost averaging in, regardless of the price. I didn't worry about it. I wasn't going to beat myself up for not being able to buy the bottom. I can't time that. Just like I'm not going to beat myself up for not being able to sell the top. I don't know what the top's going to be. I'm just going to sell along the way and be happy with however it turns out in the end. I'm just going to be happy with that. That's fine. So number one, take a look at this. 80% of all day traders quit within the first 2 years. Wish it was higher than that, because they all lose money just about. Next, among all day traders, nearly 40% day trade for only 1 month. Within 3 years, only 13% continue to day trade. After 5 years, only 7% remain. So that is good that a lot of these people figure out trading's a horrendous idea. Almost no one's good at it, and they get out. And so if you're one of the few, like the tiny, small percentage of humans that is actually good at this, kudos to you. And I mean that. I do mean that. This is not for most people. This is for almost no one. You need to understand that. And so that's why, for me, I have no interest in that game. I'm not doing that. For me, it's a buy and hold strategy. That's it. Next, the average individual investor underperforms a market index by 1.5%. Think about that. Oh my gosh! So when we say average investor, when they write that, they're talking about a person that's picking and choosing stocks or specific cryptos. Now, since they're talking index, most people aren't purchasing crypto indexes. You can, but specifically with stocks, they're saying average individuals, they're just picking a bunch of different stuff, right? And because a market index, mind you, I'm in case you're not aware, it's a collection of a bunch of different stocks, so you get exposure. Like there's all sorts of different indices that you can select from, but it's like the S&P 500, right? And so that way you just get broad exposure. So even if some of what you hold goes up, some goes down across the board, we know that average annual returns, there's somewhere in the neighborhood of like 8%. And I can't remember if that's adjusted for inflation or not. I think it is. I could be mistaken. But I just remember the 8% number off the top of my head right here. And you talk to different people, get different facts. People pull different data in different ways. But that's outside the scope of this conversation. So let's just say it's 8%, though. So that means inside of that basket, some, most, overall does well, but some won't. And so we're saying here the average individual investor, they underperform just purchasing an index by 1.5%. So already data's telling you shouldn't be picking and choosing what stocks you want to hold. If you're talking about stocks here, you shouldn't be doing that. That's what the data says. Do you want to listen to it, or think that you're better? You're just magically better? Because I'm going to go with the data. Like I'm a fan of the whole index fund approach here. And so check this out. It gets even worse though. So they're underperforming 1.5% per year. Active traders underperform by 6.5% annually. Yes, so active traders, different than people that are just selecting and holding individual stocks. Traders here, 6.5%. Now, if you're talking about like in the stock market, we already know that there's only so much gains. Like, oh my gosh, eating into that by 6.5%, like that just isn't desirable. Like, just be aware of this information and be like, do you think you're going to be the outlier? And maybe you are, but the odds are you're not. I don't know who you are listening to this, but I'm just saying you're probably not. And so that's why, like, to me, I've never been interested in delving into this crap. I'm just like, No, the smart thing to me is just not do what the idiots are doing. They're all losing money, almost literally all of them, right? Next, day traders with strong past performance go on to earn strong returns in the future, though only about 1% of all day traders are able to predictably profit net of fees. So think about that. Even if you think you're profitable after fees for the platforms you're using, you're down. This is not going well, right? Traders with up to a 10 years negative track record continue to trade. You guys heard that right. Traders with up to a 10 years negative track record continue to trade. This suggests that day traders even continue to trade when they receive a negative signal regarding their ability. Guys, these are just facts. These are just facts. Do you want to be a part of that? Like, I sure as hell do. Profitable day traders make up a small proportion of all traders, 1.6% the average year. However, these day traders are very active, accounting for 12% of all day trading activity. So think about that. Profitable day traders, 1.6% of them. Just 1.6%. Now, mind you, that doesn't mean that all of them are making much money. They could be making $100 in a year. It's not like they're getting all rich off this, and that's so that they're the 1.6%. And then you have to be heavily engaged. Again, that 1.6% accounts for 12% of all trading activity. It's sounding less and less desirable, is it not here? Next, poor individuals tend to spend a greater proportion of their income on lottery purchases, and their demand for lottery increases with a decline in their income. So look, the lottery is a bad idea. Look, I'm sure some of you out there play, and maybe it's if you're just having a little fun with it. I get it. I understand. It's fun to dream and think big and all this stuff here. But look, I've got a brother who, growing up, he would always call, and I'm sure he still would say the same thing. He calls the lottery the idiot tax. You're not going to win. I get it. There's the one outlier that wins. Fine. You're not going to win. And so it's just unfortunate that some of these are poor people behaviors. And I'm not saying it to disparage poor people. It's to recognize, just based on data, what might be prudent behavior. This doesn't work for people. This stuff doesn't work. It makes me think of what financial guru Dave Ramsey says, which effectively is, if you want to be rich, engage in rich people behaviors. If you want to be poor, do what poor people do. Effectively, that's what I'm paraphrasing, but that's effectively what he's communicating. And the idea behind that rings true to me. This is not an activity that's going to get you rich. The lottery stuff. Trading is not an activity that's going to get you rich. Holding makes a ton more sense. Here's another one. Investors with a large differential between their existing economic conditions and their aspiration levels hold riskier stocks in their portfolios. Now, that one's not too terribly surprising. Once you've got what you made, you probably don't feel a need to take as much risk. It's just an interesting fact, though. Next, during periods with unusually large lottery jackpots, individual investor trading declines. So think about that. What does it tell you about the mindset of the typical trader? When there's bigger lottery jackpot, they're basically shifting the money. That's what I would think, right? They're shifting their money into the lottery instead of spending the time with the trading. So they're treating trading as if it's some sort of lottery mechanism, which it is not. People get wrecked. So whether you're timing the market, even if you don't consider yourself a trader, if you're engaging in those types of behavior and not just holding, data shows you're not going to do as well as the person like me that just holds. And it's not all about me. I'm not trying, this isn't coming off wrong. I'm just telling you, like, there's nothing special about me. I am not a guru. I'm just aware of these simple facts, and then I do what data tells me would result in me likely having the best outcome. And on top of that, it's the easiest thing to do. Think about this 1.6% of traders that's making profit, and it may just be small profit. Think about how much time they're spending on this. And then you think about people that just hold, like me, for example. I don't even have to worry about it. I don't. I have fun talking about this stuff and run this YouTube channel, so I'm thinking about it all the time. But I'm not actively trading. Hell no, I'm not. I'm never going to do that. Ain't nobody got time for that. Well, Moonlam's got no damn time for that. And then there's this. The average day trader loses money by a considerable margin after adjusting for transaction costs, which is kind of in line with another point that I made. So it's just once you factor in the fees, like you're toast here. So I'm not going to behave like that. You tell me what you want to do. I'm not telling you to buy or sell or hold anything specifically. I just want to share some of these facts because I've never made a video quite like this before. I've kind of here and there talked about ideas along these lines, sure. But I wanted to flesh it out a bit more because I just see so many people on social media engaging in all of these behaviors that I just feel like, fine, maybe it's the case that even with this information, most people aren't going to change their behavior. But some people, if they're just aware of this, they'll be like, yeah, that's a bad idea. Let's not do that. And so for me, this is how I make all of my decisions in life. It's what I strive to do anyway. I'm not perfect because I'm a human. I'm not saying like emotions in certain aspects of life don't get the best of me. Of course I can. I'm human for sure. But what I am saying is it's a goal for me. When I'm making decisions in life, I want them to be as fact and logic based as possible. I don't want them to be emotionally based, right? That is not making decisions in life based on emotion. Almost always is a terrible idea. Of course, there can be exceptions. Like, I'm not telling you to like choose the love of your life based on like a checklist of this and that. I'm not saying that. Although you should factor some of those things in as well. I'm just saying, in a general sense, it's a bad idea to make important life decisions based off of emotion. So I just don't do that. I'm a by the books type of guy. I don't get riled up particularly easily. Again, I'm a human though. I'm not pretending like I can't. I'm just saying I typically don't. And so when I'm seeing, I've gone through all this volatility, never cashed out into USD, United States dollars. I've never sold a single XRP, and I sleep so much easier than all these people that are trading. It just doesn't emotionally impact me the same way. Because this asset class just isn't freaking going away. There's so many reasons. I could go on about that a whole nother separate video. But I'll go ahead and wrap it there. Now, I think it's a fun topic of conversation. So whether you agree with me or disagree, like, you know me, like, I love diversity of thought. Let me know in the comment section below what you think. Am I right about this? Am I wrong? Did I get some of it right? Tell me what your take is on all of this, because I think it's an awesome topic of conversation. Wherever you fall on this. And if you've got some data I'm unaware of, make me aware. Because I just want to believe as many true things as possible, plain and simple. But I'll wrap up there. I am not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.